All right, welcome everyone to this explainer. Today, we're unpacking a really fascinating global market transition. We're talking about India in 2026. Look, we are witnessing a massive pivot here, moving away from a year of real caution and turbulence straight into a decade of monumental consumer opportunity. If you've been tracking global capital flows, or maybe you're planning some corporate expansion yourself, you already know the narrative around India has completely flipped. So let's dive in and break down the exact blueprint you need to navigate this market right now. Here is our blueprint for today. We'll look at the state of the Indian market, get the global investor view, figure out who should enter now, discuss when the right time is, and wrap up with the 2026 opportunity summary. Section 1. State of the Indian market, caution to opportunity. Let's see how the macro environment has shifted. Wow, the contrast here is just night and day. Think back to 2025. It was a real test of patience, right? We saw this super narrow market rally where small caps actually corrected by 6% and foreign investors literally pulled out $18 billion. Fast forward to 2026 and we're looking at a totally different beast. We're talking a heavily pro-growth environment. The Reserve Bank of India dropped the repo rate to 5.25%, and tax cuts are putting real money back into people's pockets. Add in that global China plus one shift, and we've completely pivoted from playing defense to riding a broad, consumption-led boom. And guys, the sheer scale of the prize here, it is absolutely staggering. Thanks to this new policy environment, India's private consumption just hit $2.1 trillion. Trillion with a T. That is a massive leap from roughly $1 trillion just over a decade ago. It's wild. The modern Indian consumer is out there expecting speed, convenience, and premium experiences. And honestly, that is fundamentally rewriting the playbook for any business operating there. Moving on to Section 2, the global investor view, tracking the capital. Let's see where the money is actually going. The data really speaks for itself here. India captured a record $58.85 billion in foreign direct investment for the recent financial year. That is an 18% jump. Now, Singapore is driving a huge chunk of this at nearly $20 billion. But get this, look at the US. US investments actually doubled year over year to over $11 billion. So what does that mean? Well, global companies aren't just looking at India as a place to sell stuff anymore. It is quickly becoming this absolutely critical strategic production base for their global value chains. The Department of Economic Affairs actually hit the nail on the head with this one. They noted that India's external sector has remained remarkably resilient, specifically by benefiting from these China plus one strategies. So despite all the global uncertainties we constantly hear about, higher energy prices, shifting trade tariffs, India's structural reforms, like streamlined manufacturing approvals and relaxed investment rules, are acting like a giant magnet for global capital. Which brings us to Section 3. Who should enter now? The winning sectors. Okay, so the money is flowing, but exactly who should be jumping in? If you're evaluating expansion, the data points to some very clear winners. First up, electronics and semiconductors are the absolute heavyweights here. They're expected to scale to somewhere between $100 and $110 billion by 2030, heavily backed by the government's Semiconductor Mission 2.0. Then you've got computer software and hardware taking the absolute top spot for FDI at almost $14 billion. We're also seeing incredible runways for healthcare localization, food processing, and even the traditional IT sector, which is actually going through a huge reset right now toward AI-led transformation models. But here's the catch. Entering these sectors isn't just about showing up with a product. The modern Indian consumer is incredibly digitally native. Listen to this stat. 96% of e-shoppers in India research online before they even make a purchase, and nearly 80% discover new products straight through social media. There's no way you can just stick a product on a shelf and hope for the best anymore. Your entry strategy literally has to blend physical scale with flawless digital execution because these consumers are comparing prices on marketplaces in real time and expecting 30-minute deliveries via quick commerce apps. That leads us into Section 4. When is the right time? The micro market blueprint. The answer to when is pretty simple. Immediately. We are standing at a massive inflection point right now. Consumer demand is absolutely skyrocketing. But listen, your margin for error is basically zero. Just take FMCG companies in India. They're trading at these structurally elevated valuations, with a price-to-earnings ratio sitting around 58 times. That is double the global benchmark. At those kinds of prices, linear traditional distribution models are just going to break. Total precision is absolutely required. KPMG's data gives us a really structured roadmap for how to handle this. In your first 6 months, you literally have to ditch traditional distribution. Instead, you need to build a strategy that's tailored to India's totally unique mosaic of micromarkets. You should be mapping your pricing and your assortment right down to the local PIN code. From there, deploy a seamless omni-channel fulfillment setup, and honestly, only then do you scale. It's like a giant puzzle. You absolutely cannot treat India as just one monolithic market. It is thousands of incredibly digitally connected micromarkets. All right, let's wrap this up with Section 5, the 2026 Opportunity Summary. We've covered a ton of ground today, so let's pull all this complex data together. To summarize this explainer, first, the macro pivot is totally real. A pro-growth 2026 is officially here. Second, international capital is voting with its wallet, pouring nearly $59 billion into the country, basically fueled by global supply chain diversification. Third, the prize is a $2.1 trillion rapidly digitizing consumer market. Fourth, sectors like semiconductors, AI, healthcare, and consumer goods have a massive runway right now. And finally, the time to execute is today, and you absolutely must use a highly precise, digitally orchestrated micro-market strategy to win.
So I'm going to leave you to consider this final provocative thought. The market is absolutely ready, the capital is undeniably there, and the consumers are waiting. But as channels converge and demands for speed and premiumization surge, is your own operating model truly ready to win India's consumer decade?
Thank you so much for joining me for this explainer. You know, I absolutely love breaking down these massive market shifts, and I really hope this provided you with a clear, focused blueprint. Please go ahead and like, share, and subscribe if you found this breakdown valuable, and I'll catch you in the next one.